Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, we're closing in on the end of May already, Phil, and I can't quite believe how we've got this far, because we're on episode 32 of, this year's season 11. So, where's the time going?
It's flying, isn't it? But, so we've had some nice weather this month, so we'll take that. We've got another bank holiday weekend. So you'll be listening to this on the Saturday morning of the bank holiday weekend. So fingers crossed. I know the weather's turned a little bit, but fingers crossed it holds out for the last bank holiday weekend of May. I think a lot of people probably be glad when these bank holidays and Easter weekends are out of the way and done, because it has obviously been impacting on sales a little bit with the shifts. But no, it's all good. It's all good. But busy time at the minute. Yeah,
we've both been out in the real world this week. You were at the VRA members meeting, weren't you? How did that go?
Yeah, it was we were down at the Buntingthorpe Cox Automotive Buntingthorpe site. It was probably one of the best attended, both online and in person, members meetings we've ever had. I mean, it was very busy, but we're talking about the logistics and storage sector, focusing on the remarketing. So we had a couple of panel sessions talking about storage refurbishment within the remarketing sector and logistics, as we sort of transition into an electrified market, the ebbs and flows from the manufacturers and demand for storage. But we also had the pleasure of Darren Martin, who is now consulting in his red and black, or black and red. I can never get it the right way around. Consulting. Sorry, Darren, I know you listen to the podcast. But he was there representing Picasso alongside Phil Jones from Motors. So they did a bit of a double act, talking about the retail market and the trade market at the same time.
I should imagine that was good. I mean, what a double act that would be.
Yeah, it was. It was a good chat, and knowing them both very well. It was kind of the last bit before broke up for lunch. But no, it was a well attended, very insightful morning down there for the members. But lots to come. We've got an AGM coming up. We've got a couple more members meetings, and we're now busily trying to prepare for the annual summit in November down at Warwick University again. So busy time for the VRA.
So shall I tell you about my motor trade?
Looking forward to this one, because you've not alluded to this yet for me.
It was a bit of a strange one. So I took my car in for its annual service, and what I always do is take the car in, speak to the service advisor, have a coffee, wander around the showroom just to look at the new cars in the showroom, and then wander outside and have a look at the used cars, which I did. And on the used car forecourt, none of the cars in stock on the forecourt had prices on them. They all had QR codes. So so there were no specific details about the model you were looking at. You were just being invited to use the QR code. Now, that's new to me. I haven't seen that before. I mean, I've seen it in addition. You've got the price and hit the QR code and find out more about that particular car, but there was no indication on price.
I was just going to say that. I mean, I was going to say normally now these days, like you say, you get the QR codes where you can get all the additional specification rather than putting spec sheets on and CO2 sheets and everything else on the window or on the side windows. But I get that. But I've not seen yet without the pricing. But I wish it was like that back in my day, because the amount of times you were constantly... you change the price on the website, and then you go on the forecourt, and the price on the forecourt was different to the website. So I'm guessing this is quite an efficient way of being able to do it, because then it allows you to change the prices in the virtual space without having to constantly go out to every single car, crossing off the stock list and making sure that the prices on the car in the windscreen match. And you always inevitably run out of the number that you need. That's a quite efficient way of doing that.
Well,
yeah,
yeah, it is. It's efficient for the dealer, the retailer,
a little bit
but
more challenging for you.
yeah, as a prospective customer, it wasn't a great experience because you just didn't have any sort of benchmark and any inclination as to what the pricing was. And to do a QR on every single car that you were potentially interested in, I would find that quite a frustrating experience.
Everyone's just walking around the forecourt now with a mobile
Yeah,
phone trying to
exactly.
click. Yeah, I can't
Yeah,
imagine my mum and
yeah.
dad would be very good at that, if I'm honest with you, with experiences with my parents around that kind of technology. But it's interesting. So it didn't encourage you then, no.
No. Well, unfortunately, I wasn't in the market. I was just
You were
curious.
browsing. You were
Yeah,
tag kicking and browsing.
yes,
Okay.
I was a time waster.
We'll have to ask Steve when we get him on the podcast and workshop with him and see what he does in terms of that pricing.
Yeah, definitely. That would be a good idea. And of course, we've caught up with Steve. There's a weekday show that's already on your podcast feed. And Steve Young, he'll be a familiar name to many listeners because he's an industry analyst at ICDP, the consultancy, the automotive consultancy. But he's also the boss of West London Auto, which is the new Omoda and Jaecoo dealership in Chiswick that's owned by Çağtaş Automotive, the Turkish group. So it was great catching up with him because last time we spoke to him, Phil, was back in February, and he was counting down the weeks and days to the site opening. And now he was able to fill us in with how the launch went and how those first few months of trading have gone.
Yeah. So that as Curtis said, that full interview. We'll play a snippet of the interview on today's podcast at the halfway break. But do tune into that full interview there with Steve Young. I know it's always a fascinating. We could speak to Steve for hours on all things, but do keep an eye out for that. And the other thing to look out for next week on your podcast feed is the latest catch up with Cap HPI's Jeremy Yeh, who will be taking us through the May trade valuation movements and trends. And that'll be on your podcast feed on hopefully on Wednesday. And as always, we sort of try and get behind that headline figure and get his view on how he felt May performed. But more importantly, we always try and dig into him to try and understand where he sees the market as we head in towards that sort of June, July period now. So let's see how his forecast figure stands up for the month of May and what he thinks about June.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
And companies that we've already featured on our supplier specials include Generational, Tracker, MTC, Jigcar, Checkvic, and many more. So if you'd like us to profile your business, then just get in touch with Philip or myself. We're both on LinkedIn. And spoiler alert, we've actually been busy recording a couple of new episodes, and the first of those will be available at the beginning of June. So do look out for that. I mean, it's absolutely fascinating looking at the application of AI in the motor trade. So that'll be coming up soon.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Car Dealer, AM, Automotive News Europe, and This Is Money, starting with SMMT calls for changes to expensive car supplement as EV choice reaches record level. BYD and Shanghai Automotive's MG brand boost sales of combustion engine cars in Europe. as Honda slashes EV production amid waning demand to focus on hybrids. And in the second half, we'll be looking at Greenhous Group, where profits are up 16% on the back of its diversification strategy. Swansway expands with BYD and opens another Motor Match used car location, and we'll finish with a look at which dealer and automotive bosses appeared on the latest Sunday Times Rich List.
Yeah, there's been a couple of changes to that one when we do get to that one at the end there. But as Curtis said there, the first story of today is over in Car Dealer, and SMMT calls for changes to expensive car supplement as EV choice reaches record level, saying that the government should amend expensive car supplement to boost EV demand, says the industry boss. And the SMMT chief, Mike Hawes, says additional tax now applies to overwhelming majority of EVs, and comments come from a selection of EVs available to British drivers has reached all-time high. So we know that when we covered the March and the April figures, we talked around that influence, didn't we, Curtis, around that drag forward for the pending luxury car tax that was applied to that 40,000 and above EV marketplace, and obviously subsequently talked about the downturn in April as a consequence of some of that pull forward. But it's obviously a call out here from the SMMT that something needs to be done around this, because there's a lot of now cars that previously were well under that £40,000 bracket, but over the years they've crept just over, just for an entry model on some of that product now that, they can't, and there's a lot on there now that hit that £40,000 bracket, and you have to be very careful when you're selecting your car and the spec that you put on your car of where that eventually sits.
Yeah, definitely. This is, as you say, it's all about fiscal drag, which is it's a term that I really like, but it's a concept which I don't like. So fiscal drag, you're right. It's around that £40,000 bracket, which was actually set back in 2017. And with the impact of price rises and inflation, it means that more cars have been brought into that bracket. And within the story, it does actually go into the implications of buying a new car over £40,000, the implications for the consumer, because it can add £410 per year in tax on top of the standard rate that's charged. And it can also see buyers of new EVs facing up to £600 a year in road tax until the vehicle is 6 years old. So at a time when we're talking about greater incentives needed to encourage retail buyers to make the transition to EVs, this is proving to be incredibly unhelpful. And the SMMT have flagged this up a number of times, but they've sort of ratcheted it up a little bit for this particular story. And something that we covered on the podcast a few weeks ago, and it is covered in the story, because it mentions that Vauxhall, it's a prime example of how OEMs can respond to this setting of £40,000 on new EVs. To coincide with the change, they actually cut their prices of its top spec electric vehicles to make sure they came in at under £40,000. So they recognised the problem and addressed it, but it's still an issue, isn't it?
It is, yeah, and they are putting quite a bit of pressure, as you say. It's ramped up a notch now because of the impact it is having. I mean, they are obviously now getting increasingly concerned that I think their latest forecast for battery electric vehicle share for this year is 23.5% against a 28% threshold for that ZEV mandate. So, and really, they're even now starting to call out that they want VAT to be halved for new EV purchase and reduced to the same level on the public charging against the home charging as well. So really trying to get this cost of ownership, cost of running of these vehicles, as well as that cost of purchase, really putting that pressure on with the UK government. And there is a comment in here from my course saying there's never been a better time to go electric with more choice, better vehicle range, and improving infrastructure, offering a compelling driving proposition. But the market still isn't moving fast enough. So bold support for consumer EV uptake, notably investment in incentives and infrastructure, is needed to accelerate decarbonisation efforts and make switching open to all drivers. So really putting a clear and bold statement out there to the government that something does need to be done.
Yeah, and for the next two stories, we're looking at EV uptake and what some of the other OEMs are doing to sort of recalibrate based on consumer demand. So the next headline comes from Automotive News Europe, and it is BYD SAIC, which is Shanghai Automotive, boosts sales of combustion engine cars in Europe. Now, that's not a headline that I would have expected us to be reading out, this year, but this is what's happening. So this is based on what they've done is analysed sales in Q1 of this year, where Chinese brands cars, they actually hit record sales during the first 3 months, which is no surprise. So they actually exceeded 150,000 units. But according to the research that was produced by Dataforce and is run by Automotive News Europe, only 30% of those registrations during the quarter were for EVs. So the bulk of those Chinese sales are certainly coming from hybrids and ICE vehicles.
Yeah, I mean, it is definitely clear that EV volume has slowed from those Chinese as you rightly say there, Curtis. They make that switch to focus a little bit on that hybrid and ICE vehicle across Europe there. So yeah, I think it's quite an interesting one, because seeing the stuff coming out of Dataforce clearly shows the variances of market and where the EU sits against the UK and other markets there. But they are obviously calling out there that it has significantly stalled, hasn't it, across Europe, those EV sales. Even as these Chinese brands do expand across that marketplace there.
Yeah, and specifically, it does call out BYD, and within the piece it says that BYD is selling significant numbers of plugins now in the EU and the UK, whilst MG sold almost 47,000 hybrid and plug-in hybrid, as well as ICE-powered cars in the EU in the first quarter. And according to that Dataforce data, that was more than double its early 2024 tally, while EV sales fell by half.
Yeah, and there's a quick comment in here from Maria Grazia Davino, who we know was previously with Stellantis, wasn't she, before she moved across to BYD there, saying that BYD too is seeing more demand for its hybrid models in Europe this year. And that they were saying, she's put a comment here that in the near future we'll have two pillars. One is electric. So clear definition there that we're going to see two marketplaces. One where we've got that ICE hybrid marketplace, and one which is obviously that pure EV marketplace as we move forward.
Yeah, and it's interesting, isn't it? Because hybrids and plug-in hybrids were supposed to be sort of this transitional technology, but it looks as though they've actually got a bit more longevity than maybe industry watchers were thinking as recently as a couple of years ago.
Yeah, definitely. And moving over to Mail Online and sticking with this manufacturing EV, Honda slashes EV budget in fresh blow for the electric car industry amid warning demand as it vows to focus on hybrids there. So again, following on from what we were just talking about there with those Chinese manufacturers, Honda is obviously calling out, saying that Honda has slashed its plans to invest in electric vehicles by 30%, or equivalent of £15 billion in sterling, after lowering its expectations for EV sales in the coming years, and saying that the Japanese automotive giant says it is now expected around 20% of its car sales to be electric by 2030, rather than the 30% amid the dwindling demand there. So clear call out there that it is obviously the manufacturers are clearly pulling back on that EV acceleration, aren't they?
Yeah, and it goes on to say that whilst Honda will be pulling back on EV investment, it will start investing more in expanding its range of hybrid vehicles instead. So this really is in response to global demand for EVs. It's not where the predictions were, and everything is now being recalibrated, which for an OEM, that's a major job, isn't it? Sort of recalibrating factories, output, replanning, forecasting. I mean, this is quite
Huge.
significant, isn't it?
Yeah, it is huge, because these things are not done. As you say, they're not done overnight. It takes significant planning. It takes significant shifts in that whole supply chain and that production to make these decisions and make these changes. So, yeah, as you say there, that equivalent, that 15 billion, obviously is where that cost comes in for that kind of that shift of production and changes to that manufacturing that they'll have to do. But we'll be back after this short extract, as we said earlier, from industry analyst and guru Steve Young.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
Fantastic to have you back on. That was going to be sort of the opening question around, how the start went with Auto West London and how did the opening go, and in terms of some of that, the standout observations so far as being on that front end as a car retailer, because it's you enjoying it? Is it as you anticipated? Is it getting easier as you get more people around you? How is it going?
Yeah, it is. I mean, I think I did ask my good friend John O'Hanlon for his cheat list as to how he built Wayland's up, but he couldn't find that. So I had to do my own. It is available for sale for anyone that wants to do the same thing.
Don't all shout at once.
But the things that have surprised have really been, or caught me out have been, things that seem so obvious when you think about it, but when you're starting with literally a clean sheet of paper, and then we signed up, and our DMS provider said, okay, so where's the sales contract? Didn't think about that, So there's been things like that overlooked, but relatively easily rectified. The cars have been great in terms of reliability and so on, customer acceptance. It clearly was always a question mark about whether we could get a good team built up in the time, and we've been fortunate with that. The team have quite a few of the team have got sort of premium brand background, which again tells you something about the changing fortunes in the industry. Systems, I perhaps naively thought that we'd be in control of our own systems, but you fairly quickly discover that each manufacturer's got a requirement, and then the finance, the funder has got a requirement, and so on. So your IT complexity sort of ratchets up far faster than you might hope. So, but in general, it's been fine, and the only real obstacle that we've had has just been as a startup, no trading history, Turkish owner. I've done more know your client checks than you can shake a stick at, and we've still got one or two who are dragging their feet on that.
And Steve, just to remind listeners, Auto West London, so it's based on what was a former Tesla site located in Chiswick. And as you say, it's part of Jaecoo Automotive, which is Turkey's biggest dealer group. What feedback are you getting from your owners about their launch into the UK? Because this is their first business in the UK. And what is their appetite for growth here?
Well, there's no point any investor having a single site operation in the market, unless it's like a hobby or an excuse to go visit Jamaica or something. But Jaecoo are serious. They, as you say, biggest dealer group in Turkey. They're $1.5 billion turnover, so they rank at about top 50. Compared to the European top 50. So it's very sizable. I'm certainly not going to build a business of that size in the UK. Maybe my successor might, but there is an intention to build up a group with scale. We're taking on our second site, hopefully today, if we can get the lease all tied up, which is mainly to provide all makes after sale. Well, to provide after sales for the Omoda Jaecoo product we sell here. Yeah. But also extend that into all makes after sales and all makes used for the trade-ins and other cars. But we've also got the opportunity there for another franchise, and we've got a couple of other discussions underway. So I don't know, if you asked my best guess, by the end of the year, maybe we'll be 4 sites or something like that, from a standing start. But it just depends on the opportunities. The investors there, we need to keep our nose clean and deliver, well from this site. As long as we're doing that, then the capability is there to add more.
Well, I'd rather sense that Steve's enjoying his new role there, running a car dealership.
Yes, yeah. I mean, I say, it was great when we did initially speak with him before the opening, and obviously he was it's beaving away, ready to get live in March of this year. But yeah, busy time for him, especially whilst talking about some of those challenges we were just talking about earlier.
Yeah.
He's in amongst that, as well as running that dealership there. So, again, always great to chat with Steve. And as we said earlier, that is just a small snippet of the full interview there we did with Steve Young. So if you want to hear more about what's happening in that dealership space, what Steve's seen in the sector more generally across Europe, and obviously looking at the top 300 dealers in Europe there, then do check out your full interview there on your podcast feed from earlier this week. It's one not to be missed, as always.
Yeah, definitely. And we also got him to talk about the implications of President Trump's tariffs on the EU and what the ramifications could be for the UK. So definitely worth catching that interview.
Yeah.
So moving back to the headlines, the next one comes from AM, and the headline is Greenhous Group profits up 16% on back of diversified strategy. So this is the year end for December 31st, 2024. So it's the financial year and it's the calendar year, and it shows that operating profit before exceptional items increased from 28.7 million to 32.3 million, and that was a year-on-year improvement of 12%, whilst total operating margin decreased slightly from 1.92 to 1.8%. The group maintained robust returns supported by a 20% increase in turnover to 1.8 billion and a strategic focus on service quality and customer expansion beyond traditional manufacturer-dealer relationships. So this is really the key to the story, this diversification. But that increase of 20% on turnover, that is pretty impressive.
They're having a fantastic time at Greenhouse. I mean, I know Danny very well at Greenhouse, and hopefully himself and or Ash will at some point come on the podcast just to talk through some of the stuff that they're doing within that greenhouse business. But they are 150 mile an hour, and anybody that knows Danny and Ash, you'll know that it's never ending. But they talk here obviously about their diversification from cars to trucks, from fleet to rental, prestige to performance divisions. They've got obviously everything from Citroen, Nissan, Omoda through to Jaecoo, Vauxhall, Leap Motor. They've also got Corvette now as part of their franchise lineup. So, really, as you say, they're a really diverse operation. I think they've recently bought a Kazoo site back as well to open up as a car supermarket within the organisation there. So, again, been a very busy year for those guys down at Greenhous Group. But there is a nice comment here from Derek Passant, who's the Greenhouse Group Executive Chairman, who's saying that their plan to diversify away from the normal dealer and manufacturer model enabled them to outperform the industry in general. And while their relationships with manufacturers are at the core of their business, they'll also continue to expand the other customer offerings that they have been developing over the last few years, which enables obviously Greenhouse to continue to grow their customer base. So a lot going on within that business.
Yeah, definitely. And part of that growth is certainly attributed to the launch in April last year of its Lumen dealership. And that's focused on prestige and performance used vehicles. And that's clearly done very, very well. And within the piece, it does actually put the results in context, because it does actually say, despite the overall minimal growth across the industry, Greenhouse actually increased total sales from 50,000 units in 2023 to 74,000 units in 2024 through a combination of taking on new marques and increasing the sales of established ones it already represents, as well as launching that Lumen business. So that really does show what powered the success in 2024, and pretty much bucks the trend of a lot of the full years that we've been reporting on for 2024.
Yeah, I mean, we're going to start getting a lot of this, the 2024 results now starting to come through. I mean, obviously it's and now starting to creep into 2025 there. So again, we'll keep an eye on that. But talking about financials and performance, I know when I was off, you talked about the financials from Swansway, who are an avid listener and friends of the podcast there. But thank you to Emma, who there again, she sends us the press releases in from Swansway, from the Smythe family there. And this week, the story was released that Swansway expands with BYD and opens another motor match location, saying that the Swansway Group has expanded with BYD to add a third location, and they're also adding its motor match used car division to a new location in Fenton. So again, showing some real growth again for this Swansway Group there.
Yeah, and so that site, the new BYD site, only opened this week, so brand new, and that moves into a location that had been vacant for 12 months. But alongside the new BYD showroom, Swansway is also launching its latest used car operation, Motor Match, in Stoke. At the same location, expanding its independent used car retail brand's footprint now to 6 sites. And there's a quote within the story from David Smythe, who says, "We are delighted to be taking over a commercial property in Stoke, which has been vacant for over a year, and putting it to good use. In addition to our existing Stoke Audi site, this allows us to increase customer choice in the area. And he goes on to talk about the BYD partnership, which he says has started strongly, and the opening of BYD Stoke reflects that momentum. With the addition of Motormatch Stoke, we now have something for everyone in this market. So it really does show how Swansway have focused in on Stoke by opening these two new locations.
Yeah, great work there. And finally, we're sticking with the dealers, but heading back over to car dealer there, that car giant boss Geoffrey Warren remains wealthiest car dealer on the Sunday Times rich list of 2025. They're saying that the car giant owner places 70th on the Sunday Times rich list 2025, whilst Arnold Clark and JCT owners also are placed on the list there. But less car dealerships featured in this list of 350 wealthiest people in the UK than we'd normally see. So a bit of a shift there as to what's been happening in the car dealer owner representation in that list.
Yeah, definitely. Certainly when I was on Motor Trader, we always used to cover this every year, and the number of retailers was quite significant, but it really has dwindled down this year. And you mentioned Geoffrey Warren, so he actually dropped one place, but we don't need to feel too sorry for him because
he's doing okay.
That's based on a value of £2.55 billion. So yeah, a pretty good showing there for Geoffrey Warren. So as we say, less dealers actually appeared in the list, with Dick Lovett, owner Peter Lovett, dropping off the list. And also the Marshall family have fallen off the list because obviously they exited from car sales. But the second wealthiest car dealer name was Lady Philomena Clark and family, owners of Arnold Clark. They were up 4 places on the rich list to number 102. And the Clark family worth is now based around £1.65 billion, and that was an increase of £75 million year on year. And the other retailer family mentioned in the list is John Tordorf and family, owners of JCT 600, who moved up 10 places from to 289 in the current listing, with their worth increasing by £2 million to £456 million.
Yeah, and they do highlight a couple of other sort of notable automotive world linked in that list there. So Sir Jim Radcliffe, who we all know as the owner of Ineos car brand, amongst others there, he's featured in 7th position with a worth of 17.046 billion, but that has dropped by, unfortunately, poor thing, 6.4 billion, and fell three places there. And Lord Edmondson, who's the chairman of the IM Group, who obviously are the distributors for Subaru, GWM, Sepang, Mitsubishi Motors, UK After Sales, as well as other things with Specialist Motor Finance. They were in 187th position and dropped down the list to 109. Oh, sorry, they've up from 197th position to 187th there. So a bit of a, still got our presence from an automotive world in that list there. But I think generally there's been some shifts in that rich list this year as an impact of people leaving the UK as well. And there's been some wealthy exits from the UK there. So, interesting list there. So, hopefully, like I say, we're busy week with the headlines, quite a bit going on now with financials coming out of the performance figures now creeping through with the full years 2024 into this year now. As I said before, don't forget to listen to the full interview there with Steve Young from earlier on in the week. There will be on your podcast feed. And look out, as Kirsty said at the start of today's show, for the interview there, the catch up with Jeremy A from CAP HPI, who will give us a bit of a lowdown on the May trade value performance, but more importantly, give us the outlook as to what he's expecting as we move away from the bank holiday periods into the month of June and July.
But that's all for now, so enjoy your bank holiday weekend. Many thanks for joining us on the Motor Trade Radio podcast. We're back next week. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.